Hi, I'm Andy Myers for Weiss Research, in for Kevin Kerr on Money and Markets TV. The financial crisis of 2008 caused a pullback in many commodities, including crude oil. But for almost a decade prior to that, the energy and agriculture markets had been climbing more or less steadily. And in fact, some natural resources have rebounded so strongly that they're now above their pre-2008 highs. There's a good reason for that, and it's really quite simple. Natural resource supplies are finite, and they're getting used up. Certain commodities, especially oil, are becoming more and more scarce. This depletion will affect the poorest countries first, but the economic impact will soon work its way up to the middle class and wealthier nations. It's a simple question of supply and demand. Even as supplies for things like oil run low, there are more people in the world who need them. Just look at the number of Chinese and Indians who are buying cars. That's why we believe commodity prices still have a long way to run. Kevin Kerr forecasts crude oil at $200 a barrel within 3 years. Meanwhile, gold could reach $3,500 an ounce or higher, and rare earths and agricultural commodities still have a lot of upside potential as well. You may argue that the new global recession and credit crunch have severely cut into demand for energy recently, and that's true, but we believe that the decline is only temporary, because the world's supply problems haven't gone away. In fact, they've only gotten worse. At the moment, there's still plenty of oil, but it's getting harder and harder to find, extract, and refine. These are the same concerns that drove crude to $147 a barrel 3 years ago, and they can only lead to higher prices in the future. There are several ways to play this trend, including buying shares of individual energy stocks. That could mean integrated oil firms like ExxonMobil, drilling companies such as Nabors Industries, or oil field services providers like Halliburton. If you're not comfortable picking individual stocks, you might prefer one of the big ETFs, such as the United States Oil Fund, ticker symbol USO. Or you could consider ETF options, which give you the added bonus of limited risk. Here's the bottom line. As the world's natural resources are depleted, America's global standing and your individual buying power are likely to be drained along with them. The only way to protect yourself and even profit from this trend is with acceptance and a smart investment strategy. I'm Andy Myers for Money and Markets TV. Thanks for watching.